o'clock on the 11th of July. Happy Monday, everybody. Let's get started. We will begin with a risk disclaimer. We understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether trading stocks, options, futures, forex, cryptocurrencies, you know the risks. If you're following me out there on social media, this is the real me. YouTube.com/Chris Pulver. Other outlets, real Chris Pulver. I will not be direct messaging you first. I will reply to yours. So if you're getting some solicitations from somebody that is claiming to be me, please make sure you report them, flag them, kick them off social media. All right. Hey, everybody. Happy Monday. Nice to see you. Let's get started with a couple of things. Last week's movers, everything was in green. Will we hang on to that this week? We'll find out. Dow Jones up 0.77%, S&P up 1.94, NASDAQ up 4.56. Little climb back in tech this last week. Bitcoin back above 20K, up 12.95%, but not really making giant headway. There's plenty of pockets up towards $27,000, $28,000 on Bitcoin. Trend lines that need to be broken. Pockets need to be filled. It's not happening yet. Bitcoin this morning was down like 20,000 again, and red on the day. Where that puts us for the year. NASDAQ is still down, negative 25.63%. This is as of Friday's close last week. S&P still down, negative 18.19. Dow is down, negative 0.13.76. 10-year still up to above 3%. As central banks continue to look to tighten, we have rate decisions this week from the RBNZ and the BOC. So Australia and Canada looking to raise rates this week. We're creeping up on an ECB rate decision on the 21st and creeping up on a Fed rate decision on the 27th of this month. Bitcoin down from the week, but hanging out around 20K over the weekend. Oil off of a really massive plunge last week. We had like 21 straight days down in oil, but a big jump off that 95, 96 support. We're sitting around 104 as of Friday's close. So energy prices, commodity prices continue to show volatility. Let's get into the charts. This is going to be a super busy week for the trading rooms. Forex, we've got a lot to manage. With the news this week, we'll take a look at the calendar and also in expiration news for July. Earnings week, we have a lot of financials. Let me see. I think we've got the earnings captured in here somewhere. Notable earnings, Pepsi, Delta Airlines very interested in, and then a lot of financials, JP Morgan, Chase, Morgan Stanley, First Republic Bank, Taiwan Semiconductor, that's a big one, Cintas, Wells Fargo, BlackRock, Citigroup. So a lot of financials this week to lead things off. They did not put a good showing in Q1. So to show Q2 earnings, there's not really high expectations and high hopes for earnings. We also have CPI data that comes out this week that I'm sure the whole world will be watching. So here's the economic calendar. A couple things to take note of. Right here. RBNZ, Tuesday at 10 p.m. Eastern Time, expected to raise rates by 50 basis points to bring the RBNZ's official cash rate up to 2.5%. We also have the BOC, Bank of Canada, looking to raise rates again this week to 2%, another 50 basis points higher. There's the press conference that follows. Employment news out of Australia. And we have producer price index for the U.S. on Thursday, 8:30 a.m. We have China GDP and retail sales, and then we have core retail sales on Friday. I was looking for, Wednesday, 8:30. That was what I was looking for right there. CPI data coming out of the U.S. I actually thought the U.S. data was the week before the Fed, but it turns out it's going to be in July, or this week, July 13th. So that's going to be an interesting print because if it is positive and higher than expected, then we will probably see the Fed continue to raise rates, and most likely the market has embraced the 0.75 rate hike that's probably coming on the 27th. Here is the Fed Watch tool from CME Group. And if I refresh this, it should probably populate with like 90+% probability baked in. Yes, 93% probability that we're going to have a 75 basis points hike on July 27th. We're actually showing a 7% chance it'll be even higher than that. I don't know if the Fed has ever raised rates more than 1% at a time outside of maybe the 80s. But July to September, we're looking at some potential big jumps from the Fed. The market's already priced in the U.S. Official cash rate to be around 3.5% by the end of the year. So the big story we talked about the trading rooms is, will the Fed steadily raise rates through the rest of the year, or will they soften that trajectory? Because right now it seems very aggressive, very sharp. And if inflation data shows that inflation is transitory. And I don't want to use that word because the Fed used it. I'm saying that because, I think last year was timed very poorly to say that inflation was transitory. It's just going to go away. I mean, look, within a year, we finally started to see prices drop. But that's also with a lot of actions coming from the central banks to raise rates super aggressively off of 0%. So problems persist, inflation persists. I read some interesting articles this weekend on stagflation, recession. The fears continue to be there. Consumer sentiment continues to be bad. I think if we're going to have a correction or a bullish move at all this year, it's probably going to get kicked out until late September into October. I don't know if the midterm elections this year in the U.S. are going to matter much. They will for those that care about them. But I think as far as the markets go, the market's probably doing everything it can to look 6 to 8 months out. So what I wanted to bring up, commodity prices. Oh, I was going to look at the inflation signals. So let's see here. Oil prices falling, rising inventory from retailers. The inflation balloon might be decreasing a little bit, but slowly but surely, as opposed to dramatic drops, which is why central banks will probably continue to tighten or raise rates. All right, I'm going to say hello to who's out there, who's tuning in to the live session. And if you're out there, make sure you type in a wire, yes, everything's clear, and I'll start saying hi to everybody. Hello, Diane. Hello, Donna. Good morning. What's happening, Don, Marilyn, Wayne, Chris, good morning. Gary, good morning. Joe is here. Daniel, what's happening? Steve is here. Linda, Andrew. Nice to see the usual suspects today. Dennis, what's happening, sir? All right, let's get to the charts. So last week ended up being a pretty good week. Ended up capturing, I don't know, 500 or 600 pips with some robots. Ended up getting a couple of stocks called away for profit. About $10 or $10 credit total last week, which I'm certainly happy with. Coinbase got called away for a few bucks. Chewy got called away for a few bucks. Robinhood repaired that bad boy for about 67 cents a share, and Pfizer for a couple bucks a share. And I'm still actively in all those stocks. I want to be in those. I'm looking at a lot of credit spreads going out to the end of the year. We talked a lot about that in Equities on Demand in the trading room. This is what the week looks like. So from A to Z, from A to Z, from A to Z, all these stocks I will be reviewing this week. Not everything has to have like an expiration, but you see, if I have any notes on here, 715 expirations, lots of them. So I believe we have 21 expirations this week. We will be monitoring, managing. We might take some losses, depending on what the week does. If the week is a bullish week, things will be good. If it's a bearish week, then I'll probably take some losses on credit spreads and look to repair them out for a later date. I want to be actively buying, but I want to be protecting my capital. So it's not a catch-22. What I'm looking to do is trade options, so it's not as capital intensive. And that's a pretty easy approach for right now because I'm looking to buy. I want to start diversifying into different things. Like I still like energy. I still like oil and gas. I still like commodities, but I'm also looking at lower beta, lower risk, lower volatility, consumer defensives, decent dividends, financials. I want to see what's going to end up popping its head to show the wins again. This is a little sector snapshot of where things have been this year. The clear winner has been energy, but the volatility has recently been dumped. Okay, big time. Now, that doesn't mean that energy just continues to go lower, but the big inflation discussion was around energy prices, higher oil, right? So, again, do we have a reversion to the mean? Are we going to see more energy prices come right back and snap back up? Depends. I think that the supply issues will continue to happen in oil. We take a look at oil prices right here. We've seen some big bounces. So oil's trading at 103. I think it's pretty safe to say that right now oil is support to resistance for right now. Okay, it may be up here to 130. We've talked about this a couple different ways. Was this a wedge? Is this a wedge? And it looks like it broke to the downside, but I'm not really bearish. Okay, I think this support holds. I think this support holds. I think this resistance holds. And this resistance holds. And the market's going to try to figure out after big trend cycles from 2020 to present, I think oil can actually exist in here. And that is higher oil prices, but as long as we don't make crazy high breakouts and crisis levels where all of a sudden oil's $2 to $250 a barrel or $300 a barrel, we perhaps have some consolidation that we can kind of get used to, right? Anyway, That's oil. Gold and silver, the dollar's been strong and continues to persistently be strong. Dollar index still pushing today's chart as well. DXY chart as well. Go to the higher time frame on the DXY. Where are we going? Well, right now with this kind of runaway trend to the upside, I still look at a fifth wave move that the dollar should be correcting. If we pull back into this area, this goes back to 2001 highs, which is nuts. So since we've officially taken out these highs in 2015 and again in 2020, are we going to chew up some of this? This would be supply area, also pockets and pivots. Could we come all the way back up to these highs at 120, 122 on DXY? Maybe. Okay, that big run on the euro dollar to parity. DXY continues to stay bullish. What's funny is the dollar is getting all this love right now with a central bank that's still behind the curve. BOC's raising rates faster than the U.S. Bank of England's raising rates faster than the U.S. RBNZ, RBA raising rates faster than the U.S. But yet the U.S. is like, well, we're going to be out there somewhere until they're not. So I don't know. Part of me is kind of contrarian. I want to be a contrarian and kind of play this like I think the Fed's going to back off on their aggressive rate hikes, but we won't know that until probably September. So the market's going to keep pricing in all these rate hikes for the U.S. and is looking more favorable to be long the dollar, but that trade at some point gets crowded, overextended, and a correction will be. I mean, it's due, but a correction needs to happen at some point, and I think August is a pretty interesting transition month for that in Forex. Okay, so watching that, but as the dollar continues to stay long, gold and silver continue to stay short. Now, this is another potential range that I think could correlate nicely with the dollar. If gold finds some support, and we'll talk about this week, or the next couple weeks actually in Equities on Demand, because this low, this high, I think if gold just comes down to find support, I think gold bounces pretty nicely off those lows, right? The difference is the dollar index is not at highs anymore. The dollar index is up above those highs. So if gold bounces, which would be around 1700 to 1650, if that level continues to show really nice support and strong support over multiple years, then I see gold bouncing back up, commodities performing well, outperforming the dollar in this area. We might just have a return to the midpoint and a range trade. But watching to see how the dollar behaves along with gold and silver. Gold and silver is right here. So silver has chewed up. Again, we have some nice demand levels down here. Nice pockets filled around 19.2. Could it fall all the way back down lower than that? I suppose, maybe down to like $16 or $14. We have really strong support on silver, and I honestly like silver a lot. I've been saying this since we were buying lows around $22. I still like silver to return back to the highs around 29 to 30. If we start going lower on silver, I'm still looking to buy more down here. So we have some credit spreads. We spaced them out to the end of the year. I'm looking to buy more shares around $16 and $13. That'd be COVID lows. So watching to see how the dollar behaves with those commodities. Cryptos really quickly. Bitcoin sitting at 20,540. Not breaking lows, not breaking highs. I have this chart right here with Bitcoin. It shows that I'm just waiting for a trendline break. If you follow my newsletter out there, a couple ways to get some free trade alerts if you're interested. Pulverreport.com. Couple things. Subscribe to the newsletter, and I send a top weekly pick. It could be a Forex trade, could be a crypto trade, could be a stock or option trade. Also, systems and robots and trading rooms. If you'd like to trade with me live, Equities on Demand, we're live Monday through Friday, 10 a.m. Eastern Time every day, and we are trading a lot every day. So it's a great trading room, great experience. We had some new traders come in the last month, so nice to see everybody in there. And the room's getting bigger and bigger. Same thing with Flex Room. Over 1,000 subscribers to the Flex Room. We trade Tuesday, Wednesday, Thursday, primarily focused on Forex. But we talk futures. We look at risk appetite. We put the whole macro picture together and try to make the best trading decisions. So if you'd like to join me for a month, you want to test it out, $27. Click on these links. So go into the website, pulverreport.com, click on Systems Trading Rooms, and you can trial each trading room for a full month for $27. So there you go. Okay, or if you just want the newsletter, subscribe to the newsletter, say hi, and then join me on YouTube for free, like you are right now. All right, so Bitcoin, 20,000 plus. We're still holding that support level. Like I said, we have a lot of pockets back here. We have a lot of supply back here. But we have yet to break out of these highs. I've been trading the oscillation in Coinbase. I certainly gave back a few bucks last week. Coinbase closed at $60. I was called away from the stock at 51, but my break even was 45. So I still made some good money on Coinbase, although it would have been nice to have a $54, $55 call because for weeks and weeks and weeks I had like a $59 covered call. Anyway, I lowered it, tried to repair it, got my margin back. Hooray, now I have credit spreads out on Coinbase that go out to the end of the year. And hopefully, if Bitcoin hangs around 20K, then my $50 sell put levels will be safe, make some income there to help boost the bottom line on Coinbase. So anyway, but we have to watch. Going back to this chart on Bitcoin, I just want to see the trend line break. If this trend line breaks, we have a little bit more permission by those bulls to start running. Now, whether they make a big run back to 28 and then take out this high, form a reversal pattern, start making it way back to 50,000 remains to be seen. This right here, I'm going to put this on the chart. Okay, if Bitcoin goes up, I'm just going to say this. It's not that difficult to see. If this happens, this is risk on. All right. There is no way right now that we're going to see a rally in crypto without having a risk on rally in stocks. I mean, the whole time that the market has been uncertain and on its heels and falling and correcting, that has also been plaguing crypto, right? So if we're going to see a rally in crypto, breaking highs and making higher highs and higher lows, that risk on rally is probably going to benefit stocks as well. So I think this is what every investor, trader is looking for, especially if you're optimistic in any way, shape, or form. I also think that, maybe the highs in the stock market aren't going to be touched, and maybe the highs in crypto and Bitcoin aren't going to be touched. So if we see a rally, great, but maybe it's here towards 48,000, right? But this would certainly be welcomed by any crypto enthusiast, Bitcoin enthusiast, even if you trade blockchain, Web 3.0, versus just oscillating, going nowhere at 20K, hoping that everything looks better. But as S&P projections go lower, okay, as S&P projections go lower, based on the correlations of where the market is compared to Bitcoin, there are estimates for Bitcoin to fall as low as 12,000. So mentally, just be prepared if it cracks 20,000 that it can go to 15, it can go to 10, right? But that's why I keep telling traders left side of the trend line versus the right side of the trend line. I'm going to try to wait as patiently as possible. I don't like it, but I will wait until this trend line breaks. There's only so much time that's needed, but hopefully we'll stabilize here, or if we go a little bit lower, just be prepared for it. If earnings are bad, if the market slides off more in July, Bitcoin's probably going lower. So just be prepared. All right. Any stocks you'd like me to review? A couple ones that I'll be watching this week. I mean, you can see here the list. The list is long, yet distinguished. Alcoa, Chewy, Cleveland Cliffs, CSTM, CTRA, Delta. These are all in my portfolio right now. And I will be managing a lot of expirations this week. Like I said, I'm going to look to try to get some lower volatility plays, probably some commodity-based plays. There's also one we talked about in these sessions. I don't know if it was last week, the week before. EXEL, little healthcare range trade, which I liked. Exelixis, Excelsius, no, Exelixis. Anyway, nice range trade opportunity, but I don't really want to buy this until it's 17 or so. So hopefully what we'll see on this trade is we pop up here to resistance at 25, we fall back down to the lows around 17, buy some more range trade. I would actually be really happy to see some range trading opportunities on some good stocks, quality stocks, decent dividends, lower volatility, and see how everything works itself out. Here's E-mini futures. We're 10 minutes away from the open. 38.76. Red on the day so far in the S&P. A lot of indecision. It wouldn't be that difficult to see the market with poor earnings this week. Let's say financials are abysmal, right? Big financial stocks are saying, oh, growth is bad. It's going to be terrible, blah, blah, blah. I can see the overall markets breaking this down, and this bear market rally stuff continues. Breaking this trend line, pushing lower, possibly scoring a point for those bears this week or by the end of the month. Remember, Fed's got to raise rates this month, or they're probably going to. 93% probability that they're going to raise 75 basis points. This week, RBNZ raising rates. This week, BOC raising rates. So central banks are still hiking. Inflation data comes out on Wednesday. Is it higher or lower? If it's higher, this cycle of raising rates is going to continue. Right now, that's the only tool that these central banks have. Quantitative tightening, right? So chart alarm set. CPI data is Wednesday, correct? Yes, Wednesday morning, 8:30 a.m. So it'll be during our flex room. We'll talk about that CPI data, see what it does to prices for that day. Amateurs open, pros close. So Wednesday's close in Wall Street would be pretty important to watch. BOC that same day. So this should be a pretty volatile week, even though it is a summer trading month. With RBNZ rate decision, look for some pockets. BOC, or look for some pockets. Employment news out of Australia, look for some pockets. PPI, retail sales, and CPI. I'm watching prices. Okay, I'm glad I'm long dollar Swiss. That's up about 278 pips right now, and looking for more. We should have some more upside to it, possibly up to 99.30 up to 1.00. So that's parity on the dollar Swiss. So we've been long off of these equal lows around 95.50 and holding long. So I had a couple positions in stacked up. So we bought the lows, stacked a couple of orders. It's going our way. Looking to protect some profit here or at these highs. Hopefully this dollar Swiss is going to be another range opportunity. So we'll grab some profit up here. Hopefully we can reset, start buying again at these lows. And again, this could be a nice volatile summer range where we sell highs, we buy the lows. I'm probably just going to buy the lows. So take some profit in here. If it comes back down, buy some more. Take some profit in here. Eventually, I think this goes higher. But I want to keep buying these dips and these lows if we can. Okay, managed to get out of a nice trade last week. Well, not nice trade, but I took some profit on dollar CAD. Was up about a net 20 pips, which was better than taking a loss. I will say that. I was in a trade with a 28.50 sell, sold it again at the highs at 30.75. It worked out during non-farm payroll that I was able to get out with a few pips. So it was just really more of a repair trade. If the dollar CAD breaks higher, I think it has room to go higher. This has been a really choppy pair with oil being so volatile as well. Dollar index oil, both showing signs of strength. This morning, it's all dollar. This is the currency strength chart this morning. Weak Aussie. Baseline for pretty much everything else. The Swiss is up there a little bit ahead of the euro, which I don't love, but the dollar takes the cake this morning for strength. At the very least, with former Prime Minister of Japan Shinzo Abe's assassination last week, which was so freaking sad. That's so bad. But the BOJ hasn't really chimed in anything. You know, Abenomics, we've seen a super weak JPY, and it continues to be that way for now. But hopefully, I don't know, whatever. I mean, it's the news is super sad. The dollar continues to get priced in with some strength ahead. So we're taking advantage of that dollar strength, dollar Swiss mainly, and watching other currency pairs. All right, if you have any requests, type it in. You want to see some stocks, you want to see some charts, forex wise, stock wise, let me know. This week, I'm trying to think. We'll take a quick glance. I did a video. Oh, by the way, this week for my schedule for trading rooms, Tuesday schedule, I will not have any live sessions because I'm doing a trading marathon with market traders. So we have an all day thing, and my section is going to be right during our peak, like 8 to 10 a.m. or like 8:30 to 10:30. So it's going to overlap in my normal trading sessions. So I'll just do recorded videos and post an update for everyone in those classes this week. But today, business as usual, equities on demand. Wednesday, Thursday, Friday, business as usual for both trading rooms. But just want to let everybody know. Aussie CAD, I'm still looking to buy low and get long. 87.50 is my next level. Aussie Swiss, if I can type it in right. Euro dollar, Ches, sure. Euro dollar most likely heading down to parity. Aussie Swiss, I'm looking to get long. I am long, actually, a couple different ways. When this was dropping, I started to buy some small levels, look for a trend line break. I still expect maybe a little low to get filled down here on 65 or lows back a little bit lower than that. Oops, let me take this back here. This low, which is back in December of 2021, around 6,400. But there's still a really nice pocket trade in Aussie Swiss, so I'm going to sit and hold. Aussie Yen, slowly working its way back down. I think there's a nice bar count here to find some support at equal lows and some range trading. A lot of these yen pairs, highs, lows, could be slowly making its way back down to those levels. Traders know this. The yen can be tricky, so it might pop back up here one more time. Maybe it comes up to test the highs, and we have some type of falling or rising wedge in this case. I think a lot of these yen crosses might set up with a rising wedge type transition this year. They come down, they pop up, they come down, they pop up. Eventually, they break and they go fast. But that confirmation is going to be super critical. I keep talking about the right-hand side of the trend line for Bitcoin. It's the same thing for these yen crosses. Confirmation is going to be super important. Okay, Aussie New Zealand. We have a range in this one as well. If it breaks below 109.50, I'm interested in selling. Aussie dollar, if it hits 66, I'm looking to buy. It's a 67.31. I'm waiting for this trend line to break. I'll make this trend line a little bit thicker right here. There. That trend line breaks. I'm looking to buy the Aussie dollar. CAD Swiss I'm long on right now, and hopefully this continues to head up into this pocket around 76 and change, and up to the highs around 77 and change. So dollar Swiss paying out nicely, CAD Swiss paying out nicely. Let's go. Speaking of CAD Swiss, I stacked some orders on that one. That should be doing pretty well, and it is. Hopefully we can start chewing up that pocket a little bit more. CAD Yen, look for that rising wedge. I saw the request there for Euro Dollar, sure Donna. Okay. Euro Dollar, 1.0058. Guess what the big number is? 1.00. Parity, 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 parity. For the first time in 20 years, it's probably going to hit parity. Okay. Does that mean that it's, I mean, think about it. If you go to the higher time frame on Euro Dollar, is the Euro Dollar going to retest the all-time lows? Here's the weekly time frame. Okay. Number one, the last time we were this low was back in 2001, 2002. So it's been 20 years since we've been this low on the Euro Dollar. Are we going to come down and retest 9,000, test 8,500? Maybe. Okay. Or is there something to be said about all of this support around 105 and a potential bounce coming off of 1.00 to jump back up? Now, again, from this high to this high, even if we have a range, okay, which again is kind of breaking that structure, I am still looking to see with overextended conditions, oversold conditions, will the Forex market snap back? Will the Forex market rebalance? One thing we tend to not see in Forex is a long, stubborn trend that just goes on to eternity. A lot of times a trend will rebalance. So is parity the number, 1.00? Do we bounce up a few hundred pips from there? I say probably. Okay, and again, July, maybe not much changes. Maybe this kind of summer trend continues. August, I'm looking for a top or bottom. You know, that has happened for a lot of years. We look for trends, we look for highs and lows, overextended conditions. I mean, a lot of this is also going to have to do with the 21st of this month. Will the ECB raise rates? If they raise rates, are they going to do it enough to kind of flip the script and say, oh, wow, the ECB is actually going to raise rates? How much? How fast? And there might be some very aggressive and volatile repricing on the euro pairs. Maybe. I know Europe is probably in a way worse position right now than the U.S. Energy dependency on Russia, not a good thing for Europe. Okay. Italy, not a good thing for Europe and the Eurozone. Germany, not a good thing for Europe. Like recession is likely, probable. Inflation is high. We know all that. It's a problem. But I mean, how bad does it get? And I'm just looking left, you know, how much longer and how much more irrational does this trend have to get before we actually see a correction? I mean, like I'm saying, does it go all the way down to 8,500? Do we even care about 1.00? Probably. I'm telling you, like, would anyone be surprised if we went from 2,300 to 1.00 and then we jump back up to 105? Just do the math on that. It's 2,300 pips. Okay? Think about some Fibonacci for a second. If we did 2,300 pips and it pulled back 23%, that's a 529 pip bounce. Does that go from 1.00 to 1.05? Yep. What if we pulled back 38%? 2,300 pips, 38%. That's 874 pips. That goes from 1.00 to 108. So even just having some corrections and some balance and some cycles and some waves, I'm looking for something I can buy. Okay. And the fact of the matter is, if this comes all the way down to 95 to 90 to 85, and the more efficient it gets, the more inefficient it gets, the more likely I am to buy this and focus on, you know, staying long to come back to these equilibriums. So 105, I mean, if this goes to 9,500, my target's 105. It goes to 9,000, 8,500, my target's 105. It's not that hard to see it. It's just, do I have the capital and the patience to hang on to this trade? Because right now I'm long on euro dollar, and some people think I'm crazy. You know, I'm willing to buy off these levels to say, look, if parity means something, because it's been the first time in 20 some years, I'm looking to buy off parity. So again, maybe that's not the most popular thing, but the more crowded we get, I think the dollar in general is overdue for correction, which translates heavily into that euro dollar. Everett's asking a question, GE and Ford, would you be adding your positions now? So I see Ford getting a lot of bad flack for some recalls, which probably isn't good for them. We've also had a pretty solid, you know, retracement, yes, I mean I'm in for it. I have some naked puts, I got some credit spreads, I own some shares. I'm doing what I can right now with options to lower my cost basis on Ford. Let me check my break even here on Ford. I know once I'm done, I've got a couple of trades in here and some shares. Ford current break even's 13.54. So I have a covered call that goes out to this Friday. That will be something that expires. I'll add another covered call. That was a $15 call. Um, I'll probably start looking at some hedges against Ford to lower my cost. But how much lower does Ford go? I don't know. I mean, we had lows back here in $5. I bought it during COVID. Okay, took that up, closed it out around $23. Now that I'm back in, started around $15, I can do my best to lower my cost. I can sit on Ford, and I mean, this would be a company I'd hold for a while. GE. So GE, I don't mind it. You know, there's obviously some strong support here at this is back in '09, February of '09. We have our COVID levels back around $50. We're at 62 and change right now. I think these lows, I mean, ideally it's in the 50s, right? We come back to, $50 or so or low 50s. That's where I'd say it's a good spot to own. Even if you're range trading, right? I mean, this giant fall, if we just range trade, we go from 50 to $100. Is that a lot of volatility? Yeah, it is. It's a ton of volatility. But if you own this thing in the 50s and it jumps up to 80, 90, $100, that's also good, kind of rotation for profit. So would I add to it? Here's what I would say. If you're not tying up a ton of capital, I like testing here. If you can do fractional shares of GE, is it a good company to own? Sure, they're in everything. If we're ever going to get to green technology, you get to this ESG, greenwashing, whatever. If we ever get to green technology, we get off of carbon, we get off of fossil fuels, we get off of finite resources. Sure, GE should be a big part of that, but so should Chevron and ExxonMobil and Shell and BP and all these other major, oil plays that in 5 to 10 years, oil shouldn't be probably more than $50. But the problem is we could go to $300 before we fall back to $50. And that's where this whole sensitive potential crisis is looming. So, unfortunately, GE is still fairly expensive. They don't have a great dividend and they have a ton of debt. So that's my one hesitation about getting in. It's I don't like the fact that they're a little bit more expensive. If I can get stocks for, 15, 20, $30, I like those a lot more. Doesn't tie up as much capital. If they had a better dividend, it'd be way more attractive. One of my favorite plays right now, which again, company with high debt, but is AT&T. They're like a 5 to 6% dividend right now, and it's also low beta, low volatility, but they have a ton of debt. So the big question is again, will the Fed keep raising rates? Will this debt become unserviceable for companies like this? I don't know. That could be a problem. mRNA, is that Moderna? I don't like this stock because it is super freaking volatile. Look, I mean, this was great during 2020. This was great post-COVID. Vaccinations, the vaccination rounds, everything coming out research-wise. Sure, great for Moderna. Do I love their stock price at $175? Nope. To me, that's way too expensive. If I'm trading options on this, that's really expensive to take any assignment on Moderna. So I have opted to trade Pfizer. Pfizer's $53. And Pfizer isn't all about just COVID vaccines. Pfizer is a massive pharmaceutical company. So we've been in and out of Pfizer and equities on demand quite a bit, made some pretty good profits on it. I just lost a couple hundred shares last week for $3 or $4 a share. Pfizer, again, decent dividend, lower volatility, stock market's down. What's Pfizer doing? Range bound. I'll trade range bounds all day. I lost it at 52.50. If it comes back down to the high 40s, I'll buy some more. I've been in Pfizer with the notion that I think this is going to make its way up to be a $100 stock at some point. Right now it's 53. So I like holding Pfizer longer term. For a short, no, I wouldn't short it there. I mean, why would you short it right now? This thing's already down off the highs, right? This thing's down off the highs 66%. Why would you short it now? I mean, I think if anything, a lot of these stocks are going to be basing somewhere. This is the giant reality check. The stock base is in here. I mean, it depends on how aggressive you want to get, but I'm not interested in shorting really any stock. If you wanted to short stocks, you did it this year. January, February, you were short the indices, long volatility, short tech. Now that we've had these massive corrections, I'm looking to buy stuff. Stuff is on sale. Historically speaking, you buy low, you sell high. So if it's already dropped 80%, why am I shorting? I'm looking to buy it, but I have to have the conviction to hold it, or I've got to be trading options so I'm not committing that capital intensive trade. Okay. All right. That's my 2 cents. Again, take it for what you want to make out of it. Anything else? Anything else? Anything else? It's 9:37. I can wrap up here in a few minutes. I'll be watching. Let's see, currency strength one more time. Dollar's up, Aussie's down. Dollar Swiss should be making its way up back into the pockets this week, hopefully 99 plus. And we're trading at 98.34. Chart alarms are set on that Dollar Swiss. Looking to grab some profit. It's a big news week. I'm just going to say that. Like Forex traders this week in Flex Room, rate decisions, CPI data. There's going to be a lot of volatility we have to navigate. Chart alarms are set, like I said here. I think we have the ability to hang on to this Dollar Swiss trade up into pockets and up into parity or higher. Come back and revisit these highs. I'm protecting profit because I think from there we come back down. Range trade. It's July. So we could have high volatility off lows to highs, high volatility off highs to lows. Market doesn't do anything to oscillate, but we buy it low enough, we sell it high enough, we can make profit both ways. Okay. DRD, Chris, we talked about that last week, didn't we? We talked about that last week inside of Equities on Demand. I don't know if you're in the class or not, but we did talk about DRD. CDE is another one that I'm in, precious metals. This is one that's on my radar. I have the play right here, DRD. This is what the snowflake analysis looks like. High dividend, financially healthy, trading well below estimated value. But we really have to be willing to hold some of these precious metal plays. And right now, if we have this rotation where energy is going to be volatile, but still a good play, commodities, still a good play. We typically see these value cycles. You go from growth to value. I think that this value play might take a little bit longer. So, I mean, this is what I said last week on DRD, CDE, some of these other mining companies. I mean, right now, gold hasn't turned. Okay, I think that there may be some correlation with XAU USD. If we jump off of this support, here's my chart right here. If we jump off this support around 1680, then I think we could have some room to run. You know, CDE is a good stock that I'm in for those mining plays. AUY is Yamana Gold, and DRD. I looked at those three. They're inexpensive. They're pretty attractive from that standpoint. The price isn't bad. But DRD, I think, is a South African-based mining company. And again, I mean, it doesn't correlate, right? Like if you want to trade gold, trade GLD. So if you looked at a mining company, they don't translate the same where, oh, gold is jumping up, gold's up 20%. Well, a mining company might not be up at all. So it is a bit of a risk, but with an attractive dividend, financially healthy, that's not a bad thing. If they've got cash, they've got operational runway to exist without much trouble, it's cheap, you know. But I don't know if it's going to correlate with the price of gold like we'd want it to. So that's my 2 cents again. Let's see. ENPH, not sure what that one is. Enphase Energy, trading at 207. A little rich for my blood there. I don't know. Range-wise, I like it. If it comes back down to these levels, probably some credit spreads would be about the only thing I trade in this. I think it's too expensive unless I can get fractional shares. Semiconductors, I mean, there's better ways to trade semiconductors in my opinion. You can trade Micron, MU. Micron's at 57. This is a semiconductor play that's definitely on sale. In fact, that might just make our radar because we've talked about this in Equities on Demand. We took a lot of trades in here. A lot of buy trades in here. That support level broke. We have some pretty good support around 57. You can do, I mean, heck, I think NVIDIA is cheaper than that, right? ENPH at 206. What's NVIDIA? NVDA trading at 151. So big semiconductor plays. Taiwan Semiconductors. TSM. There's a stock for TSM trading at 78. So you get other semiconductor plays that have been discounted pretty decently outside of ENPH. Which again, maybe there's reason that they're holding, they're a little bit more resilient, but I still think price-wise, other than credit spreads, that's about all I'm going to do, and it's too high. I'd like to see this pull back, right? We pull back into these support levels, let's say 125 bucks. Sure. Take your credit spread on that all day. Make a few bucks. Otherwise, I don't really want to hold that unless it was fractional shares where I can determine the dollar amount and the risk. Okay. All right. Good stuff. So, like I said, busy week in stocks and options, lots of expirations to navigate. It's going to be a busy week in Forex with a big financial calendar. 2 rate decisions, employment news, CPI news, retail sales, consumer sentiment. This is about as busy as it gets, I suppose, for a summer month. But that's a good thing. We want volatility. It gives us opportunity. Let's get some pips. Let's make some money this week. We'll do our best. We'll grind as usual. All right. All right, traders. Flex traders, equities on demand traders, let's have a good week. Thanks for tuning in to the YouTube session. If you would do me a quick favor before you go, hit that thumbs up button for me. Like the channel, support the channel. YouTube appreciates it, as do I. And I'll set another one up for Friday at 9 o'clock to wrap up the week. Okay. All right, traders. Let's have a good week. Thanks for being with me. Bye.